Good morning from London. I'm Anna Edwards alongside Guy Johnson. We're an hour away from the opening trade. Here's what you need to know. Risk on. Chinese stocks are set for their best week since 2008, fueled by Beijing's raft of stimulus measures. In the United States, the S&P 500 hits its 42nd record close of the year. Inflation signals. We get US PCE and early inflation clues for Europe today, what they could mean for the next central bank decisions. And runoff in Japan. The country's ruling Liberal Democratic Party has narrowed their leadership contest down to 2 candidates. We will bring you the latest results and the market reaction.
Talking of the market reaction, strong session yesterday for European equities. Today it looks like a more muted start. Luxury stocks have been the real outperformer this week, which takes me to what is happening here. Look at this. Another 3.63% added to the Chinese market today. The CSI 300 has had a very strong week. Going into the holidays, which commence next week, we are seeing a very strong market reaction that has fed back into the European story. We'll see how we continue to trade throughout the European morning, because we've got to factor in another story Anna's already been talking about. We are down to 2. We are on tenterhooks, waiting for the results of the LDP election. Dollar yen currently trading 146.27. The dollar is up. We'll see how binary this reaction could be to this result. Keep an eye on this one over the next few minutes. 58 minutes to go until the opening trade. That countdown to the opening trade starts right now. Friday the 27th, good morning. We are on tenterhooks. We are awaiting the results of the LDP election out of Japan. We are down to 2. We are into the runoff, Anna, and it's going to mean quite a lot, potentially, for dollar yen, the result of this election.
Yeah, absolutely. We'll get to the details of that in just a moment. Should we start with what's been going on in China? Really huge week for China, the biggest weekly gain since 2008. It looks set to be that, at least for the CSI 300. We've seen delivery on some of the things they said they'd do at the beginning of the week today. For example, that triple R cut coming through. But the bigger question, really, and John Author's got a great piece out this morning talking about this, you know, to what extent do we trust now the words of the Politburo to deliver on this? We haven't seen some of the details. Is this some kind of Draghi moment, realising they've got to do what it takes over in China? And a lot of really smart people, and his story picks this up, talking about the difference between whether China is investable or tradable, and you don't necessarily have to have the same view on both of those.
There have been a significant number of head fakes. And that is the problem here. We don't know whether this is going to stick. We don't know whether it's going to deliver this consumer turnaround. We don't know whether or not this is an economy that is going to respond to this. Financial markets have leapt forward, but there's a certain amount of imagination required for that leap. And I'm wondering whether or not that imagination of what could be becomes a reality, and we don't know yet. Do we need to wait also for after the US election before we get real clarity on what is happening here?
Right. I mean, very simply, that logic that the market seems to be applying is that more fiscal stimulus will come in China because the Politburo said it will, and then that will mean that consumers spend more, and they'll spend more on some of the luxury items. This is why it matters for Europe. Some of the luxury items that Europe produces a lot of. We saw the CAC 40 outperform as a result of that. Does it mean they've drawn a line in the sand under a whole host of other issues? The property sector was something that we were told for so long was hanging over the consumer in China, and that not necessarily being dealt with hugely here. And we've seen oil continue to drop, which I still think is interesting. You made the point yesterday, what would have happened if we hadn't had the China news? Yep. It's about totally different news flow, but we'll have some analysis later in the hour. Copper
is up very strongly, though. That seems to reflect the idea that maybe the housing story does start to stabilise, the industrial story starts to stabilise, and we've obviously also seen the read across into the luxury names here in Europe, that an expectation maybe that the consumer is going to start to stabilise. Bernardo No has had a very good week. We'll come back and talk about luxury names a little bit later on. Inflation data today. Let's talk about the spread. Spain versus France. Today we get inflation data out of both. The expectation is that Spanish inflation will dip to sub 2%. The expectation from here, though, is that it will re-accelerate, potentially up to around 2.6%, as we see some of the tax changes start to drop out. French inflation, that's a post-Olympic story. We're going to see some of that effect still coming through into these numbers. Are these numbers sufficient to accelerate the rate at which the ECB is going to be cutting rates? It has a single needle in its compass, according to Jean-Claude Trichet, And that is inflation.
That is inflation. So we continue to watch these inflation numbers then as they come through here in Europe. Really interesting you referenced that spread. Got a nice annotated chart yesterday from Deutsche Bank with a lot of history on it, a whole history lesson in a chart going back decades, and just emphasising how rare it is that you see Spanish debt yielding lower than French debt. It is really rare. Normally Spain trades at a premium for political risk reasons and all the rest. And so it is rare what we're seeing. Of course, that's it tells a really interesting wider story about the successes we're seeing in the periphery and the troubles we're seeing in the core of the Eurozone. This is not 2011. This is very different.
We're going to get some consumer confidence data as well, which I think will be fascinating as well. What will that tell us about the state of the economy here in Europe? Turn our attention to the United States as well. Has inflation been defeated in America? I think remains a key question. The expectation is that it has been. The Fed can, because it can, cut rates at this point in time because the inflation story is in the back burner, because the labour market is the new focus. But you take a look at the claims data yesterday, the claims data were very, very strong. That seems to indicate that actually the labour market is doing just fine. The nowcast data seems to suggest the US economy is doing just fine. If you start with a series of 50 basis point rate cuts in the Fed, does inflation come back and re-accelerate?
It's really redefining what we think 50 is for, isn't it? Because, you know, you would have thought years ago, if they're doing 50, it's because of some kind of crisis, some kind of fear. But actually, it's to your point, they're doing it because they can, not because they have to. And that's the distinction or the contrast with Europe that you drew our attention to yesterday, Guy. Let's pivot to Japan, because we have plenty to talk about there. We're getting live images coming through of the Japanese LDP party counting the votes. We understand this will take you know, 10, 15 minutes, that kind of order of things. And so we're watching as the votes are being counted. There are two runners in this race now. They started with 9, Guy. They've narrowed it down to 2. And markets have something at stake here. They have skin in this game. Because if we see victory for Ishiba, that is seen as yen positive, because he is seen as somebody who is a fan of what the BOJ has been doing. If we see Takashi winning, she would be the first female prime minister ever in Japanese history. But crucially for markets, more crucially for markets, she actually likes loose monetary policy and fiscal policy, and it's the fact that she's in the last 2 is what the markets have responded to already this morning.
It would be stupid to raise rates at this point, I think was a line that came from her over the last few days. She is clearly not in the camp that believes that Japan needs higher rates. The yen has recovered quite significantly, which has taken some of the pressure off that story. It's interesting. So this is the LDP, which is the ruling party, which then becomes the Prime Minister effectively. So this is the process you are effectively watching democracy in action, you could argue, once again, a bit like here in the UK, in some ways. But there are many other challenges that the next Premier will face as well. Geopolitics is absolutely front and centre, what is happening there. There are many other challenges. But for the here and now, this is about whether or not you see the yen going up and down and whether or not you see the Nikkei going up and down in reaction to that. So you could see some quite significant amounts of volatility over the next few minutes.
Absolutely. So Takashi, watching her, as I said, because of her views on the BOJ, and you've set those out nicely, and the yen has something at stake here. To your point, though, about her, the politics and the geopolitical friction, she has colleagues in Japan describing her as something of a fan of Margaret Thatcher, and that could be in the sort of hawkish geopolitical terms. Certainly that there seems to be some reference there, and that could be something that would cause friction with China and Korea, I'm told, by colleagues over in Japan. So certainly a lot at stake, and we continue to watch that one out of Japan.
I am absolutely glued to this. In the next few minutes, we are anticipating that this result will come through. We think by past we'll have a result. Sherian, our colleague that is covering this very closely, who will join us very shortly as well, says that it could come any time. So keep your eyes glued to this. This is the story for the next few minutes. Let's tell you what we've got coming up on the show as we await the results of the LDP vote. We're going to speak to Monica Defend. She's the Chief Strategist, the head of the Investment Institute at Amundi. We're going to get the latest on the election results out of Japan. Yusuke Miyari is going to be joining us from Nomura. We will be speaking to our colleague Sherry Ann as well, we hope as well, to get an update on what is happening there. We're going to be talking what's happening with commodities. A real week for commodities. We're going into LME week, so you want to be aware of that, which is why Marcus Garvey, head of commodities strategy, Macquarie, is in town. He's going to be joining us. But you've seen oil down very, very sharply, Anna. But you've got copper absolutely on a surge at the moment on the back of this China story. Yeah,
really fascinating contrast within the commodity space, and we'll get to those with Marcus a little bit later in the programme. Also coming up today, we've already mentioned a focus on inflation. So let's go through some of the data we're going to get. We get a couple of readings, in fact, on European inflation, but not the overall aggregate, just France and Spain as we go through this programme. But later this morning, 10 a.m, EU consumer confidence. Then we get the PCE number out of the States. That's at 1:30 UK time. Crucially, we'll also get consumer sentiment, UMISH consumer sentiment. That comes 3 o'clock UK. And we have a lot of Fed speakers. I mean, Guy, you went through a whole load of names yesterday who were speaking. We didn't seem to get a huge amount out of it. Certainly Powell not giving too many clues. But we will be hearing from a number of other central bankers this morning.
The expectation, certainly many of the speakers seem to be backing the idea that 50 was the right call and that they backed it. So that actually didn't feel that there was that much persuasion maybe coming through from Powell. Let's talk about what else you need to know this morning. With just 40 days until the US election, the Vice President, Kamala Harris, has all but neutralised Donald Trump's advantage on economic issues. According to the latest Bloomberg News Morning Consult poll, Harris now leads in 6 of the 7 most-watched swing states. Bloomberg has also learnt that chip designer ARM has approached Intel about potentially buying its product division, only to be told that the business is not for sale. According to our sources, ARM didn't express interest in Intel's manufacturing operations. Once the world's largest chip maker, Intel has become a takeover target since its rapid deterioration that we've seen over the last year. And let's wrap up on the China story and the impact that it's having here in Europe. LVMH is investing in designer outdoor label Moncler in a deal that will give the French luxury giant a seat on the Italian company's board. LVMH is taking a 10% stake in Double R. Now, that's the investment vehicle that is controlled by Moncler's CEO. So what's going to happen here, Anna, is they're going to end up with 2 seats on that board and then 1 seat on the board of Moncler, which Arnaud has talked very positively about and talked about it being the real kind of innovation in this sector over the last 20 years. He has had quite the week. I have MC, LVMH's chart up on my board. It's up by 10% this week. China.
Just in 1 week. That is a lot of luxury items, isn't it? And his wealth has not suffered as a result of that. We need to put this in the longer-term context, but just to dwell on what happened just yesterday, his wealth increasing by $17 billion. It's the 3rd largest increase ever that we've seen in his wealth. He's the 4th richest person in the world, of course. And the broader context is that he's had a tough year, of course. He's still down on the year. LVMH share price still down on the year, 7.5% down on the year. So that's the sort of broader story. But yesterday was an incredibly strong day for the whole sector, actually. Consumer products and services had its best day since 2022 in yesterday's session. And luxury is, of course, half of that index. So there's a lot of positive mood music coming through on the declaration from the Politburo.
The expectation here seems to be that the consumer is going to respond, that the consumer that had been so beaten down in China, so depressed, is going to be responding. And I guess the more obvious connection maybe you make is that the stock market, if the stock market starts to perform, that is the cohort which may go out and spend some of those gains on whatever it is that they're going to buy from LVMH.
So that's certainly something of a focus. Yeah, do have a look at John Author's piece talking about some of the ironies in the situation where world capital markets leap on the diktat of the Politburo and European markets, it seems, and jewellery and, in his words, over-expensive handbags benefit even more than everybody else from the words of the Politburo. So fascinating stuff. Let's tell you what is coming up on the programme. As Guy has been saying, really important to keep an eye on what's happening in Japan at the moment. They are counting those votes. They got it down to 2. This is the runoff vote for the leadership of the LDP in Japan, the ruling party in Japan, choosing a new leader, so therefore choosing Japan's Prime Minister. Plus, the Commerzbank and UniCredit CEOs are set to have their first meeting today. We will discuss what to expect from those talks. Up next, how investors are setting up ahead of the US inflation data, that PCE reading coming later today. If you want to get involved in our conversations, please send us a message. IB plus BBTV Go is the function to use on the Bloomberg terminal. This is Bloomberg.
They are hit by 3 considerations that are very, very, I would say, profound and demanding. First, they had subcontracted their energy to Russia, doesn't work. They have subcontracted their trade to China. So security is totally subcontracted to the US, which is also, I hope not, but also a potential problem.
Former ECB President Jean-Claude Trichet joining us yesterday, talking about some of the issues facing the European economy, in particular what is happening with the German economy. Have things changed this week, though, for the European economy, for the German economy? We see what is happening in China. We see a very strong story starting to emerge, if you believe what you are seeing on your screens in front of you. Monica Defend, Chief Strategist, the head of the Investment Institute at Amundi, joining us now. Monica, we heard what Jean-Claude Trichet had to say, the challenges that are faced by the German economy. Is China about to ride to the rescue with a huge level of investment that will drive a European story in its wake?
Well, definitely, if China goes with the whatever it takes on the fiscal, and this has not been yet confirmed, this would be really a game changer for China and therefore for the rest of the world, notably Europe, that is really export-led, and we've seen the latest number where growth is coming from. It was all export. So if China goes up, then Germany will definitely benefit, as well as Europe.
How do I play that? Do I go direct to China or do I play it through Europe?
You can do both ways, probably. Let's see whether the fiscal package, what materially will be delivered. So you can focus on the onshore equity market in China, but also, as we have been usually playing it, through companies that are exposed to China. So both European equities and Chinese equity at that point might be good.
Monica, good morning. Are you treating this like a sort of Draghi moment for the Chinese economy, a realization they perhaps need to do whatever it takes or some such thing? Or is it not that material? Because there seem to be different views out there.
Well, because actually nothing has been delivered yet on the fiscal front, and this for us is the real game changer. The fact that they've been anticipating the Politburo meeting from December to now is per se a signal, but to see the game changer, we need the whatever it takes moment to become real. So for now, we stay watchful and see the further development, remaining light on the exposure to China.
Meanwhile, US stocks clock up their 42nd record close of the year, Monica. How are you thinking about the US equity markets towards the end of the year?
Well, what happened yesterday, the numbers on the US economy has been revised, showing a much more healthier economy, in particular an healthier US consumer, which is good news. When it goes to the US market, there are huge divergences when it goes to valuations. I mean, they're really enormous when you look at the Magnificent Seven and the rest of the index. So on that, we are waiting for the valuation and the recovery to widen. We are looking at earnings, and therefore probably the equally weighted S&P 500 is a better place to be invested in.
Monica, how important is it for the continued rise of the US equity market that the Fed continues to deliver rate cuts?
Well, it is important because the rates were too high, and this has an impact definitely on the U.S. consumer and therefore on the economy. And the labor market remains the key variable we are looking at. Obviously, if the Fed cut, this is helpful and is well received by market participants, but it was expected. Therefore, what we have seen as a reaction, in the short-term reaction from the S&P 500 and the U.S. equity market was honestly contained. But definitely, if the Fed stays on this accommodative stance, this would be beneficial for the risk assets.
We're going to see inflation data out of the United States a little bit later on today. Are we 100% confident that inflation has been beaten, that it is on a downward trajectory? All I hear from colleagues and friends in the United States is that this is an economy that continues to perform very, very strongly, and that actually the consumer is in good shape and that the labour market actually isn't in that bad shape. Are we 100% confident that we've got inflation in check?
You know what? Last week we had the discussion across all the seniors on the investment floor, and inflation, the base case obviously is for inflation to progressively continue. It's a disinflation trend, but the highest risk, so the alternative risk scenario we see is on inflation more than on growth. And the reason being the geopolitical risks that might inflate on the commodity prices, for example.
Monica, sorry to interrupt. I just want to get to some breaking news that we have coming through from Japan. So we have confirmation that the ex-defense minister Ishiba is to become Japan's new leader. The market response is immediate. We had seen yen weakness on the nervousness, from a market perspective at least, that Takaichi had made it into the last two. She had pretty dovish views about where monetary policy should be. We've not got that. We have the ex-defense minister Ishiba confirmed as the next leader of the LDP and therefore the next prime minister. And so the yen jumps again from down 1% to up 0.8%. Let's bring in Sherry Ann, host of Bloomberg's The Asia Trade, who's in Tokyo for us. This news just coming to us, Sherry Ann, and markets responding as we might expect.
Look at the Japanese yen go, right? I mean, we went from weakness to strength. Now, this is Shigeru Ishiba. He's the former defense minister here in Japan, but he's held so many different posts in the government. He's a very experienced officer here in Japan. This was his fifth bid for the premiership. He's finally got it. And you can see right there the vote counting and the announcement ongoing here in Tokyo. He has championed the revitalization of Japan's rural areas. And we know that that has been a very popular stance coming from the general public. There was a little bit of skepticism whether or not he would be accepted by his LDP lawmaker colleagues, because in the past, as I said, he had tried 4 times already to become prime minister, but some of his LDP lawmakers did not like the fact that sometimes he went and voted against the party, at one point actually leaving the LDP and then returning. But you have it. He's actually beat Takaichi, who was the economic security minister, and markets had expected her to win. We know that her perspective on the BOJ is to keep easing, which has sent the Japanese yen down. Investors on the other side, with Ishiba, now think that perhaps the risk is that he may be a little bit too hawkish. Are we going to see a much stronger Japanese yen like we're doing right now, and what that's going to mean for the broader equity market?
Sherry, what is his geopolitical outlook? What does it mean for the region?
There were a lot of concerns coming into this election, what it would mean for the new prime minister. If the new prime minister, depending on whether it was Takaichi or Ishiba, would actually visit, for example, Yasukuni Shrine, a very controversial shrine that, of course, not only honors Japan's war dead, but also Class A war criminals. Now, Takaichi was a proponent and a frequent visitor of Yasukuni Shrine. Sitting prime minister hasn't visited since 2013. That was the late Prime Minister Shinzo Abe. Shigeru Ishiba, in fact, has been opposing those visits. He actually calls for more partnerships with Asian nations in order to also push back against perhaps the more assertive China that we have in the region. Of course, we have seen these tensions brewing between Japan and China. Right now, we are seeing those tensions continue with Beijing really firing the first intercontinental ballistic missile.
Sherry, thank you very much.
44 years
thank you for the update. Bloomberg's Sherry Ann joining us there in Tokyo with the latest on the Japanese elections. We'll continue to monitor how FX and stock market futures are responding. This is Bloomberg. Welcome back. This is the opening trade. Our focus right now, though, not on the start of European trade, but on what is happening in Japan. Live pictures still coming to us from Tokyo. We have the results, though, of the leadership election of the LDP, and that means the new prime minister for Japan. We know that the ex-defense minister, Ishiba, is to become Japan's new leader, and the yen has responded, as you might expect. There'd been nervousness in markets that we could have seen the alternative candidate who would have been not the continuity candidate, but what we have is something that the markets recognise a little in terms of a continuation of BOJ policy. So the yen back up by 0.9% this morning. Let us get into a conversation about where Japan goes next. I'm pleased to say we're joined to talk about markets in Japan by Yusuke Mieri, who is FX strategist at Nomura and able to join us here on set in London. Yusuke, very nice to speak to you. Thank you for your time. So would it be right, I mean, I was just sort of summarising there, would it be right to describe Ishiba as the continuity candidate? Is that what we're talking about here?
Yes, I think so. So at this leadership election, to choose the leader inside the LDP is not like a regime change, right? So Mr. Ishiba is fairly likely to follow what current Prime Minister Kishida has done over the past 3 years. So in terms of fiscal policy and monetary policy, basically he's tried to follow what Kishida has done over the past 3 years.
And the markets were a little nervous about the alternative. When it came down to two, we saw that the yen moved quite a lot. We saw the yen drop by 1%. Now it's up by 1%. That on the prospect that we could have seen Takaichi, who has been critical of monetary policy. But in that context, then, Ishiba is likely to stay out of the BOJ's way, just let the BOJ get on with it and continue tightening policy?
Exactly, I think so. So Mr. Ishiba is pro-normalization, so he's not hawkish. He's not pressuring the BOJ to hike at the moment. If you see the inflation data in Japan, it's not that super hot for the BOJ to rush for hiking. So basically, Ishiba is trying to make the BOJ independent, hike when they think it needs to do.
How much is the market mispricing where the yen can go?
I think the market is significantly mispricing the BOJ's policy rate hikes. So we think the BOJ will hike December this year and also 2 more 25 basis point hikes next year. However, if you see the OIS market pricing, mid-July is less than 0.5%. So I think the market is trying to seek the optimum timing for when to price in the BOJ's rate hike when we see this kind of a global bond rally or major central banks entering the cutting cycle.
So buy the yen, sell the Nikkei?
Basically, that is the trade. We think dollar-yen will eventually go lower in 2025. And, well, Nikkei, I mean, there are lots of macroeconomic fundamentals that supports the equity prices, right? So we think the Japanese economy will eventually recover. So it's not just about the rates, but in theory, maybe that's the case.
Right, so it's not just about interest rate differentials, but that's part of the story, yes, okay. And I mean, I'm thinking here about what you said there about how many hikes you're pricing in from the BOJ next year. Given what the Fed is doing, given the direction of monetary policy from so many other central banks, given what China is doing, you know, lots of other countries on the other side of this trade, what kind of pressure does that put on Japan? Some of it welcomes, perhaps, but some of it might lead to unforeseen consequences.
Exactly. I think that's what Governor Ueda has clarified in his latest press conference. So he emphasized that U.S. economic uncertainty is one of the causes that makes the BOJ to stay at the moment. So if that uncertainty declines and if the inflation in Japan, especially the services inflation, remains steady in Japan, then BOJ will have a good opportunity timing to raise policy rate going forward.
So, Yusuke, you think we get back to about 1%? Let's call it 1% on Japanese rates. Is that enough to encourage Japanese investors to repatriate money out of other bond markets here in Europe and in the United States?
If the BOJ can hike to 1%, then if there is more prospect the BOJ can even hike further, possibly, then I think there could be a repatriation going forward. But at the moment, if you see the current capital flows, Japanese investors are still favoring to buy foreign bonds. And the BOJ's quantitative tightening is at a slow pace. BOJ is trying not to screw the market. So at the moment, the Japanese investors are still staying calm. And we're not seeing a significant repatriation at the moment. But if the BOJ hikes to 1%, then there's a prospect of going there.
Yusuke, stay with us. Let's just get an update from our colleague Sherry Ann, who we were speaking to just before the break. She's on the ground for us in Tokyo and following the latest in this political story. We're looking still at the live pictures coming to us from the LDP. The leader is the new leader of the party is speaking. What are we expecting to see next then, Sherry? This is a new leader who's going to want to stamp his mark on the cabinet and policy. What do we know? What expectations do we have?
Yeah, so today we have the president of the Liberal Democratic Party being elected by LDP lawmakers and rank-and-file party members. So from here, we are going to get that press conference from the new leader. You are now watching the current Prime Minister Fumio Kishida speaking at the party headquarters. What's next is, as you said, the assembly of the cabinet. Now, in the past, because these factions existed in Japan before they were dissolved, given all of these slush fund scandals, a lot of these factions would put forward people that they wanted to be part of the cabinet. There were criticisms in the past that because of this, perhaps some of these members did not necessarily have the experience to lead some of those cabinet positions. Perhaps there's going to be a little bit more freedom when it comes to the new president of the LDP to be able to form his own cabinet the way that he sees fit. We have the Diet parliamentary session on Tuesday, so we're headed towards that. We're also watching when the new prime minister will call for general elections. Of course, the new prime minister will want to get that mandate from the general public as well, and as you said, try to implement his own policies going forward. So that is sort of the schedule that we're waiting for. Right now, we don't know necessarily when the lower house elections, the general elections, will take place. A lot of media have been reporting that perhaps the timeline should be after the end of October to give all of these lawmakers time to campaign.
You said Japanese politics wasn't exciting. Sherry, he's talked about an Asian NATO. He's talked about a stronger approach to China. Just talk us through exactly how this is going to work, what the geopolitical landscape is going to look like as a result of this vote today in Asia.
I'm guessing right now that perhaps for a lot of the Asian neighbors across the region, there might be a little bit of a sigh of relief, because when it came to perhaps Sanae Takaichi taking the helm of Japan, there were a lot of concerns that there would be reigniting really those geopolitical tensions in the region. She's a frequent visitor of the Yasukuni Shrine, controversial because it also honors war criminals. She wanted to change Article 9 of the pacifist constitution. With Shigeru Ishiba, there are more analysis that he wants to cooperate with regional leaders. He wants to cooperate in order to be able to deter the likes of China. He has called for an idea such as an Asian NATO to not only deter China, but also North Korea as well. He wants a little bit of a more equal security partnership with Washington, so we'll be seeing how he manages that relationship with the United States as he manages the relationship with the regional partners like South Korea, and also how he pushes back against China, given that we continue to see these brewing tensions between Japan and China at the moment.
Sherry, thanks for the update. Thanks for the coverage. We greatly appreciate it. Sherry Ann joining us out of Tokyo. Yusuke Miyari from Nomura is still with us. Sherry brings up the point of the general election. We could have those potentially at the end of October. Is that another... How significant a volatility event could that be for Japanese assets?
So in terms of the Japanese equities, if we have a general election or a snap election, there tends to be an anomaly, a famous anomaly that Japanese equities tend to perform into the election. So that creates volatility for the Japanese equities. In terms of the fixed income, it depends on how it will affect the BOJ's policy decisions. So if you look at the past history, when we have general election, there is like a tendency that the BOJ tends to avoid to change policies around the election period. So that could lower the volatility in terms of the fixed income market.
Yusuke, you're talking about the economy recovering next year. I think you said that's your expectation. Tell us about the longer term challenges that the Japanese economy faces and what this new leadership means for tackling some of those, because I think everything that happens in Japanese politics, from an international investor audience, everyone remembers Abe and the three arrows, and clearly a lot has changed. There have been various leaders ever since then, but one of the arrows was all about other changes in the economy, getting more women into the workforce, for example, dealing with an aging population. What are the longer term challenges that the economy still faces?
So I think Japan has lots of problems. So if I take to try to speak everything, I could take like hours. But as you said, like the aging population, the demographics, those are big, key important parts. For the labor market, the women coming into the labor market, as well as the elderlies coming to the labor market, that has been like mostly solved in the Japan's labor market. So going forward, I think political stability is important. So Abe had a long administration, but after that, Suga, Kishida, they're relatively shorter compared to Abe. So we should not go back to the time that there there will be frequent change in prime minister, but we need to have a stable political stability going forward. That's important for the Japanese economy.
Yeah, do you think any of those changes that you were talking, do they move the needle for Japanese growth? Do they make a big difference?
At the moment, no, because as I said, it's a continuation of the existing administration. But obviously, fiscal issue is one of the biggest issues in Japan. So Mr. Ishiba is trying to solve that fiscal issue by becoming a relatively more fiscal austerity.
What is regional development? What does the agricultural story look like? What does the rural story look like in Japan? There seems to be a large focus for the LDP on that particular demographic. How does that influence policy here? How should we think about policy developing in Japan? You've talked about some of the demographic challenges. You've talked about some of the other challenges. How big a gap is there between the urban story and the rural story in Japan? Yeah,
that's a good question. People are coming into Tokyo or the urban areas. That's not a bad thing, obviously, because Tokyo is like a developed city. But if you see the rural areas, the population and aging is becoming an issue, and Mr. Ishiba is trying to tackle that problem. If we have those regional cities growing, then that could be positively influence the entire Japanese countries and could grow Japanese economy even more. So that's what Mr. Ishiba is trying to tackle, and we could possibly
That's where the growth comes from, is it? Is that a necessary prerequisite for getting Japanese growth moving again?
I don't think it's a prerequisite, but I think there is a potential. There is a more growth potential on the regional areas in Japan. And if that recovers, then Japanese economy will recover along with Tokyo and other those regional areas.
Yusuke, thank you very much for joining us. Yusuke Miyari from Nomura with thoughts on Japan, the impact of the election of a new leader for the LDP and therefore a new Prime Minister for the country. You can continue to follow Bloomberg's coverage of the leadership election. The match, as it was dubbed, might be over, but we know the result, but certainly plenty of coverage still coming on the T-Live blog. TLIV Go is the function to use on the Bloomberg terminal. Coming up, we will talk about luxury. It's been a big week for luxury stocks on the back of China. LVMH celebrating its China stimulus boost with a Moncler purchase. More on that and your other stocks to watch. That's next. This is Bloomberg. Welcome back. This is the opening trade. We have expectations of a decent start to trade, flat to positive perhaps, across European equity markets, dealing still with the aftermath of everything we've heard from China this week. We're working through the impact of the Japanese election. We'll see what that does. But in terms of the markets right now, Guy, we've got some CPI numbers coming out of France, and the red headline suggests that this is quite weak for the French September number, 1.5% year on year. The estimate was 1.9.
So this is a post-Olympics number, and we're seeing, obviously, that showing up in the PMI data. We're now showing it up in the CPI data and the PPI data. The PPI data is also out this morning. CPI month on month has come through at 1.2. The market was looking for a negative 0.7. That takes the year-on-year number to 1.2. That's obviously a fairly weak number. In terms of the harmonised number, the year-on-year number stands at 1.5. That's down from 2. This is encouraging stuff for October.
Right, and in terms of, yes, encouraging because of, in the sense of what the ECB might do, I suppose.
Yes.
And we have expectations of a wider Eurozone number for inflation coming out on October 1st, so that's next week. And that is likely to drop below 2%, below the 2% target that is so crucial for the ECB, of course, for the first time since 2021. And this is one of the first building blocks towards that number. So that's coming in weak, and that is having an impact on the euro, weakening the euro, increasing expectations perhaps that we see something more than we had expected, sooner than we'd expected from the ECB.
Yeah, it was HSBC and it was now Deutsche Bank as well, talking about consecutive cuts coming through. They see October as being live. The market is increasingly moving in that direction. This data will only assist in that process.
Absolutely. Bunds rising, 10-year yields down, in keeping with that move we see on the euro there and ECB expectations. Let's go to our Markets Live executive editor, Mark Cudmore, who can weigh in on some of the global themes we have been dealing with this week. And Mark, what a week it has been in terms of the China narrative. How are you thinking about the China story as we come towards the end of the week? I was reading the John Author's piece, who's talking about the difference between things being investable and tradable. From everything you've said, you've seen China as very tradable for quite a while.
Yeah, absolutely. I think, look, it's been a pretty extraordinary week. The superlatives across the gains, across all sorts of Greater China indexes are really quite immense. Where do we go from here? Well, we have the extended holiday in China. We have a couple of days off in Hong Kong. I have no strong view in the short term here. I do absolutely think there are material upside gains to be made in the months ahead. I just think that we've gone so much this week that, who cares where the next few percent are? I mean, that's one of the things that's ironic, is that a move of 2 or 3% now just seems irrelevant. It doesn't matter if we pull back 3 or 4%. So that's only back to where we were about a day ago. And that just means that people will get excited about a chance to buy the dip again. I think that there's been a macro turning point in the world's second largest economy that is material for Chinese stocks, material for Hong Kong stocks, material for Asia stocks, material for the world.
Material for the world. OK, so let's talk about the world. You've got a US economy that still looks like it's doing OK. You look at the claims data yesterday, you look at the nowcast data, it all signals actually that this is an economy that's doing just fine. Thank you very much indeed. You add in the world's second largest economy. Are we convinced that inflation is coming down? Are we convinced that the Fed can cut hard from here? Are we convinced that at some point soon we may be back maybe talking about hikes? Could that be something that we should be more convinced about?
Is that the royal we, Guy? Because I am most definitely not convinced that inflation's coming down. I think that people are way too complacent. I don't think we get anywhere near the extent of cuts that are priced into the curve in the Fed. I think that the initial claims in the US, that's one of the best kind of labour market indicators, high frequency ones, at the lowest level since May. Now, since end of May until this week, US two-year yields fell 145 basis points. And they fell on the narrative that the labour market was crumbling and inflation was conquered. Well, the labour market's not crumbling. The high-frequency data shows that. And we're just normalising from an extremely hot labour market. And second of all, we just got massive upgrades to growth, suggesting that Fed policy hasn't even been that particularly restrictive and probably been way too complacent on inflation. PCE today will be another important sector. We've also got personal spending, personal income. I expect the data later on today to further boost US yields again. I think two-year yields have a significant amount to rise into the year end, and I think that stocks will survive that.
And the yen, just briefly, Mark, the yen is now up, having been down earlier on the back of what we were discussing in the last part of the programme, could be the continuity outcome for the Japanese leadership.
The initial reaction is completely logical. Yen rallied because people were pricing in the more dovish PM candidate to win. Instead, the hawkish candidate won, so yen rallied sharply. But longer term, Japan does not have sustainable inflation, and ultimately, yen will be one of the weakest currencies into year end.
Mark Cudmore. Yes, we are talking about the royal we. Thank you very much indeed. Mark Cudmore, Markets Live executive editor, joining us on the round trip around the world, covering everything. You want to get the team's analysis on what is happening here, you can do so. MLIV Go is the function on your Bloomberg. There's a few interesting stock stories that we need to be talking about. The luxury sector has been a big theme of this week. Let's carry on that conversation. Joe Easton is here with the details.
Morning, guys. So analysts at Citigroup today calling shares of Moncler higher over in Italy. This is after LVMH announced that it is taking a stake in the Italian luxury goods maker. Now, it's a bit of a complicated deal whereby LVMH is buying a stake in the investment vehicle owned by Moncler's chairman. But net-net, they'll own around 1.5% of the company, which later could rise to around 4%. Citi saying the stock will rise due to the slump we've seen in that stock over the past year, as we have seen across the entire sector. But we can't talk about luxury without looking at those massive moves that we saw yesterday, as Mark was saying just now. Absolutely extraordinary. LVMH up almost 10%. Kering, Christian Dior, Hermes among the best performers. We also saw Burberry, Moncler itself, all of those shares booming on this news of fresh Chinese stimulus. So we'll see whether we come off a little bit or perhaps even extend some of those gains today. But then it wasn't just the luxury goods moving. We were looking at commodities as well, because that massive jump that we've seen in iron ore futures this week, this is what we got on the screen, up around 9% for the week for iron ore, given the boost from that Chinese stimulus to the property market in China in particular. Now, going the other way, we had the oil price weighing on all of the oil majors yesterday, mainly due to concerns around oversupply in that space. So we actually saw a really interesting divergence over the past few weeks between the stock's basic resources index, which tracks miners, and then the energy index. We can see them go in opposite directions today, so we want to keep an eye on what's going to happen in those commodity shares at the moment. Total, Shell, Equinor, all those firms in focus once again this morning. Then finally, we got a profit warning this morning. Now, this is coming from the auto space, auto parts. Forvia over in France is giving a bit of a nasty downgrade on both their revenue and also their margins as well. Now, these are the main points that they cite. So they cite a slowdown in the EV market in Europe, something we've heard a lot of already. Also, high inventories over in North America and the impact of strikes in North America as well, something that we've been covering a lot. All of these stocks could get an impact today. So Forvia itself, also Hella, which is linked to this company via their investment setup, maybe even Vallejo as well, Continental. Could be a little bit of pressure on this sector given the warning around margins and profits from Forvia this morning.
Joe, thanks very much. Our equities reporter Joe Easton with a heads up on some of the stocks to watch. And Guy, everything that happens today happens in the context of the week, doesn't it? Because given what we've heard from China on Tuesday and on Thursday in particular, implementing those policies as we go, we continue to see some commodities, as Joe was saying, rising this morning. Copper higher, steel, iron ore, all higher.
Marcus Garvey's going to be joining us a little bit later on from Macquarie. We'll get his take on what is happening with these metals. It's interesting that oil has gone in a very different direction. Anyway, it is Friday. The market is about to open here in Europe. We're expecting a positive start to that story. Those numbers look a little muted considering what we've seen so far this week. Maybe a more relaxing Friday coming our way. This is Bloomberg. Friday the 27th, good morning. Couple of minutes to go until the equity story starts here in Europe. The expectation is we're going to see maybe a few more gains being added to the tally that we've seen this week. This chart here is European equity session yesterday, US equity session yesterday. Where is Europe taking its cues from? Is it still from the US markets, or is it actually coming from the Chinese markets, which is so strongly this week? That has really been where the gains have come from. Look at the luxury sector. Look at what's happening with the mining sector. So look backwards, maybe not forwards. The US session later is going to be dominated by the PCE data, but yesterday we saw maybe a little bit of a decline after the European close. Nevertheless, European futures are positive. This is the picture you're looking at. Stocks 50 up by just 0.1%, but positive. FTSE 100 futures absolutely flat. Oil versus the miners seems to be the trade right now. Nasdaq futures a little softer. We're down by 0.4%. Does the US stock story run out of a little bit of steam towards the end of this week, where China has powered forward, taking with it Europe in its wake, Anna?
Yeah, absolutely. The CSI then looking as if it's had its best week since 2008. And in that context, under the hood of that, we see read across into luxury stocks. That's been the story of the week. We've got an individual name to watch today, though. That's Moncler, as LVMH takes a stake in Moncler, an investment in Moncler, seen as quite positive by many of the analysts because of the financial backing and support for the Italian maker of jackets that this will bring. We're also watching oil and iron having moved in opposite directions. Today they move in the same direction, but oil not really rising much, just up 0.2%. And Forvia in the auto space, auto parts, they're cutting their guidance, citing a lot of reasons for that, but certainly one we will watch and a sector we will watch, Guy.
Absolutely. So here we go. The Friday session almost upon us. We are starting with an expectation we'll see modest rises. A flat session probably more likely as we get going here in Europe. That's what the early indications are. So let's get into it. It's time for the opening trade. FTSE 100 starts absolutely flat as anticipated. We have seen the oil stocks over the last few days coming down. We've seen some of the mining stocks going a little bit higher. The CAC 40 has been driven by the luxury names. We'll see how that opens this morning. We've got some single stock stories we need to watch there with the Moncler news. But nevertheless, the overall story has been one of luxury names rising this week. So the FTSE 100 is struggling to make headway. The Stock 600 absolutely flat at this point in time. We'll see how long it takes for the CAC to open. There you go, opening up a little higher than most this morning, up by 0.3%. It has been the outperformer after being so long the underperformer. I would fold in French politics here. Just think about what is happening on the French political story and whether that could upset this positivity that surrounds the CAC 40 right now. We'll wait for the DAX. We'll see how long it takes to get moving. The SMI as well. In the meantime, Anna, what's happening below the surface?
Yeah, below the surface, if you look at the sectors, it's not to the extent of yesterday, but some of the same sectors are doing well as they did yesterday. So China bringing the week to a strong close. European equity markets, as you say, a little more sluggish, but that hasn't stopped consumer products and services, which is the home of the luxury sector, from being the best performing sector this morning. And so we see that sector up 1.5%. Now, that's that's nowhere near the more than 6% gain we saw for the sector yesterday, but it's still a decent performance. And basic resources also on the rise in terms of those stocks this morning, so reflecting the higher copper price, higher iron ore prices, all of that playing out quite positively. And technology up again, up 0.4%. So it seems as if a few of the themes of the week are continuing to play out pretty well. To the downside, we see healthcare, we see banks, but the moves today much more muted than earlier on this week. Then,
can I just throw something else into the mix, which is what is happening with Spanish inflation data, which is hitting the tape right now. We've just seen some very weak French numbers, and the Spanish are not to be left out. We are seeing CPI month-on-month come in at -0.6. That's down from flat last time round. And the headline number, the CPI number, comes in at 1.5. That, again, significantly weaker than 2.3%. I think they were looking at 1.8, 1.9 at Bloomberg Economics. The expectation is that that number will now re-accelerate. There's some base effects caused by some VAT changes to energy prices that are going to drop out of that. So you could see a re-acceleration from here. But nevertheless, two prints this morning already signalling maybe that the ECB needs to get into gear.
Yeah, absolutely. So expectations have been building that we will see a cut sooner than expected from the ECB. And, you know, there's just less in the way of them doing that as we see these inflation prints coming in below expectations. Back to the stock story, Guy, and we continue to see luxury stocks doing pretty well. That's the broader China theme, but there's also some other news in that space as well. I can see that Ferragamo is doing very nicely this morning. That stock up as much as 5% at the start of trading. We have LVMH trading higher, up by 2.7%, and they, of course, have taken a stake in Moncler, and I don't see an opening price on Moncler just yet, so we continue to watch that sector. We have a downward move in Forvia, which is the auto parts maker. That stock down by 1.3% on the back of reduced guidance from that company.
LVMH has had quite the week. 23rd, 24th, 25th, 26th. Now we're into the 27th. Over those sessions, I think we're up by 18.31%.
Easy to end positive for the year yet, though. I think it's still down, isn't it? Year to date, it's down by 4.6%. So it's pulled its way quite a long way back this week with those gains.
A roller coaster ride from Bernard Arnault. The Chinese stock story very much front and centre this morning, and how is it folding into the European story? I think you can look at this from two different angles, one of which is what is happening with European stocks, which I think is interesting. The other one is the economic story. We've just seen some very weak inflation data coming through, which will maybe encourage the ECB to cut rates. But at the same time, if you do see Chinese stimulus, is that something that's going to feed through back into the manufacturing sector in Europe and change the narrative there? So how do you play the China story? How should you be thinking about this? Yesterday, that was a question we asked to BlackRock's Helen Jewell. This is her take.
In terms of China directly, yes, I think there is a place for that in a global portfolio. And this is something we've seen in the last month or so. We have seen a bit of a rally in China. And today is a real reminder that with China, there is always a floor level to those stocks and those names. There will always be some stimulus coming through.
Helen Jewell joining us from BlackRock. This time yesterday, talking about that impact that we are seeing from the Chinese story into the European story. Andrew Parry, head of investments at Hambro Capital Management and impacting investing boutique. Regnan, joining us now.
Good morning.
Nice to see you. Good morning.
Good to be back.
Yeah, I haven't seen you for a while. Andrew, what do you make of the China story? How do you factor that into your thinking? Does this significant stimulus that we've seen announced this week change the narrative both for China, Asia and Europe?
I think it is quite profound. I think the timing of it's interesting, and the sheer scale and coordination of it really means that I think this is something that's going to have legs. So we might still see it as a cyclical recovery in the China story, not a permanent change in the direction of some of the big forces at work in China, but it's going to be one we can trade for some time. You know, you just talked about LVMH.
Yep.
Still down on the year, having been up nearly 20% in a week. What it's forcing people to do is rethink about their positioning. One characteristic of this year is everybody tends to get crowded into the same trades. So when perceptions change, even if they're on the margin, it can have quite profound impact on where investors direct their capital.
Does this make Europe a better investment? Should I be thinking more about what is happening with my investment story? A lot of people are still underweight Europe. The spread with the American market remains substantial. China stimulates and it sticks. Does that start to close some of those gaps?
I think it does. I think what we're going to see from China is a recalibration of fears of deflation being exported to maybe rethinking about inflation. You know, you mentioned inflation at the moment. It's been very well behaved. Inflation is at a relatively low. It's got close to central bank targets. You said it might encourage the ECB to cut further. But, you know, if we're going to get more stimulus from China, you know, there's been a real shock and awe. Fiscal, monetary policy changes. We've had the Fed cut by 50 bips. We have the ECB easing. Even the Bank of England is begrudgingly joining the party. We've actually got a lot of monetary stimulus coming in. Maybe this is the point where the story on inflation will be tested. We've had a really good run.
Yep.
But is it going to stick? You know, it's not guaranteed that inflation in 12 months' time is going to be as well behaved.
Right, yes. So let me pick up on that part of the conversation and think about the European story and the ECB. We've gone from pricing in the chance of a cut at the next meeting, which is next month. It's gone from 60% to 70% in quite a short space of time. And we got the data out of France today on inflation coming in below estimates, the Spanish data also coming in below estimates. Expectations that the number next week for the Eurozone as a whole comes in below 2%, below that target. Feels like a long time since we've talked about inflation numbers that low, Andrew. So how much is there still to trade on that, I suppose? Or how much do we go on to thinking about whether it stays that way?
I think the inflation trading it on the downside, I think that might be over for now. I think that this is the point I make about this coordinated set of action on interest rates. I think seasonally it's a time when we begin to get more optimistic about markets, economies. We've had a real messy summer, haven't we? People have been rotating from tech back into tech, thinking about what's coming next. You know, industrial metals have been out of favour. So if China actually does manage to stimulate more demand, even it doesn't have to be a huge boom. It's just in the absence of a negative can actually change perceptions. And so that's why I think inflation is going to bump, at best, is going to bump along where we are.
Yes.
But it might actually surprise to the upside, because policymakers might want that with all this government debt around.
Right, and does it depend on whether China turns the corner on its inflation numbers? Because, you know, the risks around deflation and the focus on deflation in China has been around for a while, part of the story for a while, and that's been, you know, at a time when Western governments or Western monetary policy authorities have wanted inflation to weaken. They might not want to see that anymore. So how much of an impulse do we get from the inflation story out of China, do you think?
Well, I think it's quite fashionable to say China is going to the Japanification. You know, its economy is sort of moribund. There's nothing much they can do to recover. But if you look back, we've been asking, as investors, for a stimulus package from China. Because of the politics there, it doesn't happen in the way that it would in the West. It's very binary. They can change their mind overnight. And literally, they have. So that's why I think it's far more profound what we've seen this week. In fact, it's easy to say that the markets have soared. But actually, I think it could lead to quite a significant change and a reorientation to more nominal GDP plays over the next 3 to 6 months as we run into the end of the year.
Our equity markets, if inflation starts to stabilise and potentially tick a little bit higher, how are equity markets going to react to that? In theory, that should be good for the top line. So you're going to see top line moving quite nicely. That should be good, in theory, for the earnings story. But nevertheless, equity markets more broadly have been reacting quite strongly also to the thought that rates are going to come down and down quite significantly. If Jay Powell turns out to be Arthur Burns and is forced to raise rates potentially fairly soon, how do equity market investors react to that?
I think it's a bit premature to start talking about raising rates.
Do you?
I think when I say that the inflation story might be hitting its low point, it doesn't mean that you're immediately going to get an upward change in direction in the rate structure. I think you'd probably get more rate cuts, and that's why I think inflation could next year be not as benign as it is this year. But, you know, to your question about what do investors do, I think investors are already changing their orientation. If we'd been talking 6 months ago, we'd been talking about this very narrow market globally, led by a small handful of stocks. That's hegemony of the big tech stocks is broken. You know, we're now getting greater breadth in the markets, and I do think it will begin to be quite healthy for markets. It might mean limit the top line if we begin to see a rotation from mega cap into the broader economy, into mid cap.
Do you think the index comes down on that?
No, I don't think it actually comes down. I think it just doesn't. We get more stocks going up, But because they're not the mega cap stocks, or not predominantly the mega caps, it might just limit some of it. But as a stock picker, as an investor, I'm going to be enthusiastic about that. It gives me a greater range of opportunities. And there are a lot of great companies out there trading at really good valuations that have been ignored for a long time. And in a nominal GDP growth world, there's a lot of sort of more industrials, companies that I think will come back into favour.
So what are the best themes to play then, Andrew, as we go towards the end of the year, into the last few months of the year? What will be the best themes to play? Because if the tech theme was so dominant, as you say, up until the middle part of the year, now we've seen a little bit of broadening. Is it the themes we've talked about for a while around electrification, that sort of thing, or what are you thinking of?
Well, those themes have been doing very well. If you look at Siemens Energy, I think has outperformed Nvidia this year to date. So we've already got some of those themes beginning to come back into favour, and that's part of my thesis about a broadening of the market participation. I think there's lots of great names in the industrials. The consumer cyclical names have been really beaten up. We've seen the response in the luxury names, but more broadly, I think we've got quite pessimistic about the strength of the consumer. The consumer is not in a bad place. When we look at balance sheets, corporate balance sheets are pretty healthy. Consumer balance sheets, particularly here in the UK, where we like to do ourselves down, actually, it's not a bad story. So maybe the UK comes back into fashion. We've certainly got some great companies trading at some very low valuations. So I think it's just this concept of it's not just about a handful of stocks.
Yes.
You can look more broadly.
And bigger picture, though, linking to what you just said there, if companies are OK and individuals are OK in terms of their balance sheets and it's governments that are not, what does that do to your investment thesis, to your outlook?
Well, that's the big Achilles heel of the story, is the indebtedness of countries. That's why I think we can't be complacent on the outlook for inflation, because they need the stimulus to get the economic growth going. And with large budget deficits, that will mean they're probably going to be more likely to err on easing, even if inflation stops behaving as well as Guy was talking about when he was challenging me about rising interest rates. So they're not going to rush to do that because of indebtedness. So that's why I think we could see over the next 12, 18 months maybe a little bit more inflation than people think, just because it's in the interest of governments. They're not going to have their Arthur Burns moment and raise rates prematurely, that's for sure.
Andrew, nice to see you. Thank you very much indeed for stopping by to see us. Andrew Parry, Head of Investments at J.O. Hambro Capital Management. Let's talk about what is happening with the Core 6 this morning, figure out what this story looks like. You have seen luxury names very much on the front foot, and that continues. As you can see, LVMH is up very strongly, up by over 3%. But interesting to see Novo softening up as significantly as it is this morning. You're also seeing weakness in Schneider as well. That stock down by 2.5%. ASML up. There's interest in what is happening in the chip space this morning in the form of ARM potentially talking to Intel. That conversation rebuffed, apparently, but there are things moving in that space. It'll be interesting to see how Intel opens a little bit later on today. Let's get some individual stock story moves with Joe Easton. Back over to you.
So we've got some wild moves in Moncler in the opening, trading over in Milan today. Now, the stock jumped around 15% at the open. It has now gone into a trading halt, up 12%. Actually ticking again now. It looks like that halt has released. But the stock's soaring as LVMH takes that stake via an investment in an investment vehicle owned by the chairman, so really getting a boost on that one. And the moves higher in luxury, really incredible. Once again, still rallying. Bear in mind, LVMH up close to 10% yesterday, up another 3%. Now, on a weekly basis, it is the best week for that stock since around 2001, according to Bloomberg data. More than 20 years in terms of the weekly move. Bearing in mind in the context of the big declines that we've seen since around March. But still, a very, very impressive week for the luxury space today. Then the other sector which had a bit of a negative news out today, it was the auto space. Now, Forvia was the one that put out a statement this morning, but Hella yesterday, after the close of trading, these companies are interlinked via a 2022 deal. Now, Hella put out a warning after the close in Germany, so that stock is coming down, but it does look like Forvia and some of the other peers potentially priced in the negativity around the strikes in the US and around the slowdown in EVs already. So those stocks actually holding up OK. We've also got news from Renault saying that they are selling more shares in Nissan, and this is actually going to boost their net income, according to the company. So that is a positive one over in autos. But it looks like Hella taking the brunt of that warning on the auto space today. Then we'll flip over and have a look at some of the deals news. So Eni looking to potentially sell a second stake of Eni Live. Now, this is one of their businesses that does work in renewables. They recently sold a big $2 billion stake, but there is a report out from Reuters overnight saying they're looking at selling another chunk. And Prudential, the London-listed Hong Kong-focused insurer, doing a pact with an Indonesian bank, according to a statement overnight. So that one gaining in London, a bit of extra M&A on the screens today. Then we'll flip over once again, and we do have a couple of interesting broker moves this morning. This one catching my eye. It's pretty much the favourite stock across the entire UK market, and even in Europe people love it, but it does get a downgrade. Rolls-Royce coming down to hold at Kepler today. A valuation call. It's up around 150% this year on the engine boost in aerospace. So they come down. No longer recommend buying. A bit of a reaction, down 0.8%. And finally, Goldman Sachs has a big note out on the Swedish and the rest of the Nordic banks. One firm they recommend selling is SEB. They say it's really exposed to declines in net interest income. So that one is one of the decliners over in Stockholm, down 0.9% today.
Joe, thanks very much. Joe Easton from our equities team with an update of some of those individual stock movers. Another stock that's had a really good time lately, and in fact, not a bad year, is Commerzbank. We will get to the conversation around the future of that bank shortly. A first encounter for the new Commerzbank CEO and her UniCredit rival. That is set to take place today. Commerzbank and UniCredit will talk. We look at what's at stake. That's next. This is Bloomberg.
Friday morning, 20 minutes into the session, 21 minutes into the session, and a more muted session is emerging after we've seen significant rallies on many fronts this week. You've seen it in the commodity space with the miners doing very well. You've certainly seen the luxury space on the front foot this morning. This, as we've priced in this China story, it has felt like an incredible day every day this week as we've kind of digested and dealt with that China story in a little bit more detail. This morning, though, as I say, a little bit more muted. We're up by 0.2% across most of the main markets. We'll come back to the inflation story a little bit later, but inflation incredibly weak out of both France and Spain. If that is continued, maybe the pressure really mounts on the ECB to deliver a rate cut in October. Let's turn back to one of the other stories that we've been watching throughout this week, and that has been what has been happening with Commerzbank and UniCredit. Commerzbank's management set to meet with UniCredit today, the first encounter since the Italian bank started building a major stake in the German lender earlier this month. Let's talk about what we should expect from this meeting. Ollie Crook joins us out of Berlin. So it's been a rollercoaster week for both banks this week, particularly for Commerzbank. Bettina Orlopp out having to make statements about how she is going to develop this business and push it forward and why it should remain a standalone institution. Where do we stand at the end of this week? Where do we start this meeting between these two institutions?
Yeah, Guy, and just so much has happened in this last week. Let's just remind everybody that 21% stake emerged only on Monday, right? And then there was that Bank of America conference where basically you had this sort of odd scenario where you had both Andrea Orcel one day and then the next day Bettina Orlopp laying out kind of their plans for the bank going forward. And what Bettina Orlopp put out was basically an increase for profitability. She wants to boost investor payouts, and this is all part of the case that she has to make now for shareholders who ultimately will have a big say in what is the future of this bank, whether it continues as a standalone or it goes as potentially part of UniCredit. The board has backed her plan and the independence of the bank unanimously yesterday. That is what has emerged, and that's what we going into that meeting today with the management of Commerzbank and UniCredit for the first time meeting face-to-face, or not face-to-face, I should say virtually, but speaking this morning. We do not know if Orlopp and Orcel will both be in this meeting, but this is the beginning of potentially many conversations that will govern the fate of this bank. We should also say that we've heard from more Italian officials who have speaking in favor of this. We know the Germans are against it. They still have that 12%. What will they do with that? I should also tell you guys, by the way, that outside of this office right now, in front of the Brandenburg Gate, there are two flags flying right now. It is the German flag and the Italian flag, because there is a state visit by the president of Italy here, Mattarella, who will meet with Scholz later today. I wonder if this will come up.
That's a nice little detail. Thanks for that, Ollie. Does the presence of the flags make a deal more likely? What sense do we get as we get towards the end of the week as to whether this deal actually happens? By which I mean, of course, we know they have a stake already, but, you know, some kind of fuller takeover of Commerzbank.
I mean, listen, Anna, there's been a lot of shareholders have been sort of reticent to speak, but if just imagine that you're a Commerzbank shareholder and you're potentially a long-suffering one. I mean, this is the rally you've got in the last 2 weeks. We're talking about 30% since this whole sort of discussion began to happen, and that's sort of where we're resting right now. That is basically the UniCredit premium in the shares right now, and that is something that as a shareholder, you can't really ignore. These are the highest these shares have been since 2011. If you look at the sort of profitability and you look at the Orchel track record, again, as an investor trying to appraise where this bank is going to go, you look at the return on common equity. We've talked about this before. It's not even close in terms of what Orchel has delivered and what Commerzbank has delivered historically. In terms of the odds of an actual deal coming through, we have got from Citi now, the analysts there saying that they see it actually as a 70% chance that this is going to go through at a 10% premium. So as you hear sort of more analyst commentary about that, it's going to heat up substantially. I think the one last question is, how far is the German government willing to go in order to make this deal not happen potentially? They're still a large shareholder, though, but not even close to any kind of majority. The question is, could they do something else? And that's going to be the question that we're going to watch over the next few days.
In terms of what could happen were this to be successful, how will UniCredit treat Commerzbank? What do you think the model could look like? And is Vereinsbank being seen as the template in Germany as to what could be delivered here?
I think that is definitely the fear that is seen by many people, certainly by the unions, because there were a lot of jobs that went after that, right? And that is the point that many are making. And that's why also the unions themselves would like UniCredit, or I should say Commerzbank, to be declared critical infrastructure, to maybe give it a sort of enshrine it and protect it a little bit more in a way that they couldn't do before. The question is that given how politically sensitive this is there a greater impetus if this deal were to go through for Orchel, again, to maybe take a little bit more of a tender approach, at least in the beginning? But again, Guy, we talked about this a little bit yesterday. I also think that if potentially Commerzbank can stay as a standalone, now it has the cover to make a lot of difficult decisions, but maybe not going quite as far as a UniCredit might.
Ollie, thank you very much. Bloomberg's Oliver Crook there. I'm reminded of our conversation with Jean-Claude Trichet, former course president of the ECB, yesterday. He was suggesting that Germany needs to have a wake-up call around its banking sector, given the experience he has with dealing with the banking sector across Europe. I thought it was interesting to get his thoughts. He thought modernisation of the structure was important. The main problem is simple. They have a lot of banks that are not too keen on making profit, is what he said to this programme. We continue to watch the German banking scene with that in mind. Coming up, as oil has been declining of late. I saw it was ticking up this morning. No, now it's down again, so it's a little volatile in this morning's session. We'll get the big picture, though, from Marcus Garvey from Macquarie. This is Bloomberg. Welcome back. This is the opening trade. 30 minutes into Friday's session. We see modest gains by this week's standards for European equity markets. This week up 0.1% on some of the major markets this morning. The luxury sector, of course, has done really well through this week on the back of that China stimulus story. Today we have a new element to that story, a sort of a sidebar conversation, if you like, but LVMH taking a stake in Moncler. That is seen as something that, that is something that's driving the share price of Moncler, as you might expect. It's up by 8.6%. It's halted once again, so it's sort of been in and out of trading halts this morning. We continue to watch that sector. Let's turn our attention, though, to matters geopolitical, coming to us from New York. France's new foreign minister has called for more effort from G7 countries to build a solution to the conflict between Israel and Hezbollah. Jean-Noel Barrot spoke with Bloomberg's Anne-Marie Jourdain at the United Nations in New York.
The situation in the region in southern Lebanon is not acceptable. There have been too many casualties on both sides. civils, children killed by Israeli strikes, and Hezbollah hitting densely populated areas in Israel. That's the reason why France called for an emergency meeting of the Security Council of the UN that convened yesterday night. And that's also the reason why France, alongside the US, conducted a negotiation effort alongside other G7 countries and members of the international community to try and build a solution that we think would be acceptable by the two parties, which is basically a 3-week ceasefire that would allow for both parties to move towards a more durable cessation of hostilities.
But Netanyahu is rejecting that. And so far, the evidence shows that Hezbollah has no interest in this. The reports out of Israel right now is that Netanyahu actually backtracked. Is that accurate?
So you're saying that Hezbollah and Israel don't have an interest in this truce or in this ceasefire. I believe another way. I think that on both sides there have been displaced populations, and I think it's in the interest of the Israeli government, but also for Lebanon, to let the thousands, tens of thousands of people that have had to leave their home to go back to their home and to their places. And this is not possible until there is a ceasefire along the blue line, namely the separation between Israel and Lebanon.
Did Israel say they were for it and then backtracked in their public remarks?
The statement that France, the US, and other partners released last night has been thought and negotiated in a way that we think can be acceptable for both parties. So this is a solution that is now on the table for both parties to seize.
That was the French Foreign Minister Jean-Noel Barrot speaking to our colleague Anne-Marie Hourden in New York. Israel's Prime Minister has vowed his military will continue its indefinite bombardment of Hezbollah targets in Lebanon. We heard them talking about that just there. Benjamin Netanyahu is set to address the United Nations General Assembly later today. So let's build on our coverage here with Bloomberg's managing editor for the Middle East and North Africa. Ona Ant joins us from Istanbul. Ona, tell us a little more about the global response here, about how global and regional powers are trying to stop this fighting.
Well, as the French minister was just quoted as saying, there has been a truce proposal by the US President Joe Biden and his French counterpart Emmanuel Macron on Wednesday. They wanted to introduce a 3-week cessation of hostilities between Hezbollah in Lebanon and Israel on the other side. That, they say, will allow diplomacy to take the top priority and basically try and diffuse the tensions between the two countries. Those two countries, the US and France, were supported in their effort by regional powers, including Qatar and Saudi Arabia. And the UAE, another key US ally in the region, a key senior official from the country, Anwar Gargash, the advisor to the UAE president, came out yesterday and said basically the US should do more to leverage its relationship with Israel to try and basically fundamentally force the country to take part in these truce discussions. And it's important to make note of the fact that these comments are not just individual comments from the country. It has been the common general expectation from regional powers since last October when the conflict began that the US should do more, basically rein in Israel and force the country into a truce negotiation with both Hamas and Hezbollah at different times.
In terms of the expectation of what that truce would look like, we were originally talking about 3 weeks and fighting would come to an end for that period. Is that still what we're talking about here? Is that still the likely shape of this deal? Is anything changing in terms of the structure of what we're looking at?
No, the structure of it hasn't changed, but what I think is important to note is the fact that this proposed deal, since it was first unveiled on Wednesday evening, about 36 hours ago, has been met with great skepticism by parties that would have to take part in it, especially in Israel. We've seen that Benjamin Netanyahu basically said that he would not ease airstrikes on Hezbollah, and members of his own coalition government, including far-right members such as Amar Ben-Gvir, who happens to be a cabinet minister, said that they would have to consider basically pulling out of the coalition. should the Israeli government take part in these in this proposed truce deal. On the other end of the political spectrum in Israel, also a leader of opposition, Naftali Bennett, who is a likely candidate to run against Netanyahu in the event of an election later this year or next, has also expressed great skepticism, basically saying that the time is not right for Israel to consider this truce proposal. So we're seeing great skepticism, if not pushback, on the side of Israel to this preliminary truce proposal unveiled by the US and French.
Joining us out of Istanbul, Onorant, thank you very much indeed, our managing editor for the Middle East and North Africa. Commodities very much have been moved by this story and also by the China story this week. It's been a busy week in the space. Earlier, we spoke to Rio Tinto chair Dominic Barton about the volatility that he's seeing and the supply concerns that still exist.
Of course, we're going to be thoughtful in looking at where there are opportunities, but I'm saying as an industry, we're not going to inorganic our way out of the challenge because of this massive supply-demand gap. It's huge, and it's in at least 5 different commodity areas. And so that's going to need more mining. We're going to need to develop more projects, so we're just not going to be able to get it done.
We still don't have enough. Marcus Garvey, Head of Commodity Strategy at Macquarie Group, joining us now this morning around the table. This week feels like it's been a bit of a game changer for the commodity space, and that change has come, yes, from the geopolitical story, but mainly from the stimulus story out of China. Have you thrown your numbers out of the window? Have you rethought what you're looking at in terms of the demand story? Is China going to hit its expected GDP targets? And what does that mean for metals like copper and iron?
I think you need to pass out what we've seen this week into the shorter-term dynamics around this year and then thinking about, well, what does this stimulus package as it emerges actually look like over, say, the next year plus? In terms of this year, our base case had actually already been that stimulus would be stepped up and that they would hit the target, so we're not immediately needing to change our demand numbers. But I think that was a different view to much the market held, and that if you look at what was priced into, say, Chinese equity markets or onshore commodity markets as a whole, they were very clearly showing that the market assumed that the government was effectively unwilling or unable to hit the growth targets, and there was a lot of short positioning in the commodities side of things. So that the short-term market response is, I think, justified in terms of a repricing of the likelihood that they'll hit that target. And I think it's fair to say that the price response has been more dramatic because I think the rhetoric has been more dramatic than we'd expected. So it's fair to say short-term price risks still on the upside, but we haven't at this stage changed our near-term demand numbers.
If this is consumer-focused, if they want to live the consumer, why do industrial metals go up?
That's a very good question, actually. I'd say if you look at the composition of industrial metals demand in China this year versus, say, 5 years ago, if we go back to pre-COVID, particularly something like the steel market, we've seen a huge swing from that really being focused on construction and the long steel market, things like rebar that get talked about a lot, to now actually it's been dominated by flat steel, which is going into consumer durable goods, things like automotive sector, white goods and so on. So it is relevant, but to your point, it's clearly less commodities intensive than if you go down the traditional, stimulus playbook, which would either be infrastructure or property. And I think the challenge there is, one, they're still saying they want to control property supply, so that doesn't suggest a massive building programme is about to kick off. And the other thing is that they are actually already doing an infrastructure stimulus really focused on the build-out of renewables, so the extent to which they can step that up is challenging.
Can I ask about the sort of how this narrative, which is what we've been talking a lot about this week around China and the increased demand perhaps from China for the reasons that you point out, and some of that going into, even if it is consumer focused, linking that with some of the other thematics that we talk about when it comes to commodities like EVs and the fact we're going to need a lot more of certain metals to fuel that, but we're not selling quite as many EVs as we thought we were. So how does that story, in terms of supply and demand dynamics, play in?
Well, I think if you look at the battery materials specifically that are going into the EV sector, if you look 5 years forward, maybe cobalt, we could park it to the side, it's still probably going to be in a surplus, but something like lithium starts to look like it could get very tight, and you are going to need to add to the supply that's already projected to come. But in the near term, to your point, because demand has proved disappointing, and actually we've seen a very dramatic supply response already over the past 3 years, most of those battery material markets right now are clearly oversupplied, and that's been reflected in the price action we've seen. Lithium prices down sort of 80-odd% from their highs. it may be a critical mineral, but it doesn't mean it's a sort of one-way track higher in terms of the price action.
That's very interesting. So there's a short-term dynamic, and then there's the longer term. Let me ask you about oil, because then there's oil, and it didn't seem to be part of the same story as metals this week. We saw oil prices broadly in retreat. They continue, actually. They're down again now, down 0.2%, 71.47 on Brent. Clearly, there's a lot in the mix here, and some of the news lines from other media around Saudi Arabia seem to be what's driving things. What is in the driving seat for oil?
Well, I think whether or not there's a $100 price target, I think we'd be somewhat sceptical about that as an explicit thing to focus on. But if we step back and look at the underlying structural dynamic in the market, the real problem from Saudi Arabia's perspective is that at any price, not even close to their fiscal break-even, any price around where they might target it, you're going to be in a scenario where non-OPEC supply is going to grow faster than trend demand growth. And so while that's the case, it's very hard to find an equilibrium in the oil market. And really what you need to do to get to an equilibrium price, therefore, is to go down to a level where you can see those two supply-demand dynamics on an underlying basis match up. And our view for some time has been that that's probably in the 60s. That's not in the 70s, certainly not in the 80s, nowhere near 100. And in a sense, if we just, rather than looking at the specifics of that article, we just think about that broader backdrop, I think there's a bit of an acceptance in the market that that's the case. And that does mean structurally it's hard to be bullish on oil in terms of fundamental balances, unless, of course, you do get something like a meaningful supply disruption that changes the game.
Plug some geopolitics into that for me. What's geopolitics worth, do you think, at the moment? So 60 is the base case. What do you plug in on top of that?
I think at the moment, in terms of the geopolitical risk, it's getting very little risk premium in the market. But a big reason for that is fair is that because of the OPEC Plus cuts, there's quite a lot of spare capacity. The evident risk, I think, if we look at how the market has priced out geopolitical risk premium since, for example, Russia's invasion of Ukraine didn't deliver any meaningful supply disruptions. What happened a year ago in the Middle East hasn't led to any subsequent supply disruptions yet, means that is potentially underpriced from a shorter-term perspective. And so that if you did lose a meaningful amount of supply in the short term, say 1 million, 2 million barrels a day, yes, there's spare capacity in the market, but would that actually tighten things up a lot in the short term? And could you get some fairly dramatic price action because the positioning is also very short? That is clearly an asymmetric risk in terms of shorter-term dynamics.
What dollar number do you plug in?
In terms of current...
Yeah.
What do you should be or what is in?
OK, both.
So I think what is in is probably very low single-digit dollars. To that point, what should be in, you could argue maybe higher single digits, but the problem is how do you value that optionality? Because effectively, you're putting that in as a risk premium, but it's decaying away unless something happens. And if you think about it in the sense of how an option would price. So it's hard for the market to sort of sit there with a risk premium if nothing's happening over a period of time. We see this in other markets that trade with geopolitical risk premium like gold at times. You often, after an event, suddenly get a geopolitical risk premium, and then it bleeds out of the market if nothing actually materialises that changes the underlying conditions.
So you sort of react first and then work out the facts on the ground. What about, so from the dollar, what about the rate cut story and how supportive that is for the global growth narrative, and therefore how does that read across into what you're doing in commodities?
I mean, if we look at commodities performance during rate-cutting cycles over, say, the last 50 years, since the early 1970s, the only actual example of them really rallying hard during the early part of a rate-cutting cycle was 2007, and we obviously know how that ended up. Normally, markets sell off during a rate-cutting cycle because the reason for the rate cuts is that growth is weakening.
Yeah, and that's not the case this time.
It's not the case. And so it is net supportive. And when we think about it, going back to the consumer globally rather than just in China, what's going to support global durable goods demand, particularly from the US, rate cuts evidently help. So it is a net positive. But I think the prospect of it leading to a really strong surge in growth and a big demand pool for commodities is probably a bit too optimistic. But it's fine for commodities if the Fed doesn't deliver on what the market is pricing, if the reason for that is because growth has proved robust.
Yeah.
If actually they deliver as is priced, or even more than that, but it's because growth has rolled over, that growth rollover would be more impactful for commodities than the Fed action in isolation.
Marcus, thank you very much. Thank you for coming to see us this Friday morning. We appreciate it. Marcus Garvey, Head of Commodities Strategy at Macquarie Group. Coming up on the programme, back to that luxury theme, LVMH is investing in the designer outdoor label Moncler. We'll bring you the details next. This is Bloomberg. Welcome back to the programme. 8:49 this Friday morning. We have a slightly more muted picture, though, for stocks. They're in the green, but they're not quite doing as well as they were earlier in the week, up by, well, not even 0.1% on the Stoxx 600. So we're eking out some gains. US futures, though, are pointing a little bit lower after the week that has been pretty strong, in particular around the luxury sector here in Europe. So LVMH shares in the green this morning. This is the French luxury giant invests in the designer outdoor label Moncler in a deal that will give it a seat on the Italian company's board. Let's get some analysis. Andrea Felsted joins us from Bloomberg Opinion. Andrea, good to speak to you. The Moncler share price, very volatile this morning. It seems this might have been something of a surprise to a number of people. I mean, does it make sense to you, this taking a stake in Moncler?
I was surprised. It does make sense, but I was surprised. I didn't expect Moncler. I thought it might be watches or perhaps cosmetic skincare. It does make sense. I don't think they're about to buy Moncler. But what it does mean is when Remo Ruffini does ever decide to sell, LVMH are in pole position and no one else can get in front of it. So that's obviously, you know, a strong position to be in. Also, Moncler's actually been an acquirer itself. It bought Stone Island a few years ago. Speculation it could be the next Italian luxury powerhouse. So if he wants to buy more, he's now got a really strong long-term partner to help him do that.
Is it a strange situation? You end up taking a seat on the board, you don't plan to buy maybe, or you don't think he's going to buy the whole thing. You get a good view of what others in the sector are doing.
Yes, also, a lot of these luxury groups take very long-term views. It's part of the reason they're so successful. They do take long-term views and they position. And, you know, you have these prize assets, and once they're gone, they're gone. You know, so Cartier went to Richemont. You know, you never get the chance, probably, to get that again. So Van Cleef went to Richemont. You know, now incredibly popular. Nobody else can get its hands on it. So you do get this positioning for these prize assets.
Why does Moncler need LVMH? Does it need LVMH?
It doesn't really. It's been doing very well on its own. But Remo Ruffini has tended to have a partner at this investment stake, this investment company level. It had the Rivetti family, which owns Stone Island. They recently exited. So he does like to have a partner here. And what better partner could you have than LVMH?
Luxury names have been under pressure for a while now. There's some opportunistic element to this, I'm sure. Has that door now closed? China stimulating the economy. This week, the gains have been epic.
I think it's still going to be quite rocket. I mean, they were clearly oversold last week. You know, there was a real element. You know, the analysts were sort of falling over themselves to downgrade. And if you're a long-term investor, you know, luxury's not going to go. I mean, we've got a few things. We've got China struggling. The US hasn't really come back. And we've got this sort of feeling almost like a luxury backlash. You know, they put up prices so much, it became out of reach of many people that had bought. So you have these things going on. But luxury's not going to go away. You know, I'm sure the Chinese, you know, consumer isn't going to stop shopping luxury. The US has got a fundamentally different relationship to luxury than it had a few years ago. But the European names were seen as very sniffy, a bit snooty. Then you had LVMH by Tiffany. It put, you know, late Virgil Abloh at the head of Louis Vuitton, the creative director of Louis Vuitton menswear. Now got Pharrell Williams. That's really opened these brands up to a whole new customer base. When I went to New York a few years ago, I mean, you always had luxury shops in New York. Yep. I couldn't believe how many luxury stores there were. I couldn't believe I went in the winter, everybody had a Moncler coat on. You know, and they're opening stores not just in, you know, LA, New York. They've opened stores throughout the country. So that's a fundamentally different relationship to luxury. I don't think that's going to suddenly go away. People might not be buying now because they bought a lot in the pandemic. You probably don't need it. You know, if you bought a design handbag a couple of years ago, you probably don't need one right now. You could probably wait another year or so to buy another one. So there is a bit of a trough.
Guys nodding.
But
I always believe that.
But I don't think luxury is fun to be. You know, many people around the world are getting richer. They buy. You know, luxury makes us feel good. It's status. It shows
you've got to be really cold though.
Some of those jackets are really big.
Yeah.
Andrea, what about, we often talk about the sort of different segments within luxury, and there's the super high end, and maybe some of them put up prices, isolated some of their previous audience a little bit. Yeah. Then there's the sort of top end of the middle market, and that seemed to have been a place that was also struggling recently. Where are the pain points now?
I think that aspirational customer is still hurting. Obviously, the rate cuts in the States should ease that. That should help. Inflation coming down in the States, the Fed cut, that should help that aspirational customer, particularly in the US. You've got the super high-enders still spending. And jewellery as well. Jewellery's been a real bright spot for several reasons. They haven't put prices up as much as bags. Also, very few people buy their first luxury item. It tends to be a wallet or a handbag. You graduate to jewellery. You know, we've all been buying bags now for, say, like the last 10, 15 years. Designer bags have been a thing. So some consumers are ready to trade up to jewellery. So that's made jewellery quite resilient as well.
It feels like it's getting us set up for the weekend.
I really hope my wife's not watching. Andrea, thank you very much indeed. Andrea Felstead joining us from Bloomberg Opinion. This takes us perfectly actually on to something we're going to do from now on. We're going to look ahead to what is happening for the weekend. What is coming up this weekend is a big race down in Barcelona. So we've had the first couple, and we're talking about the Louis Vuitton Cup here. This is the prelude to the America's Cup, the Louis Vuitton America's Cup. Basically, you've got the two challengers that are racing. It is 1-1 at the moment between Ineos and Prada Pirelli. They're racing down there. These are spaceships when it comes to the yachting world. The next race is a day away and 4 hours away. It is 1-1 right now.
Yes.
If whoever wins this goes on to challenge Emirates for the America's Cup. These things are doing 50 knots, verging on 50 knots. Absolutely incredible. Go online, take a look at some of the video.
You could do the sport, Guy. I'll just reference the fact that there's a lot of luxury all over that, isn't there? There's Louis Vuitton, there's the Paris Fashion Week. But in terms of the America's Cup, if the actual sport isn't your thing, colleagues at Bloomberg, here at Bloomberg, have written a nice guide to Barcelona, which is an extremely busy city and difficult to get away from the crowds. And, we've seen a lot of American tourists coming to Europe this year. That's something that even some economists have been talking about. So anyway, nice non-touristy city guide to Barcelona on the Bloomberg terminal. If you need that.
It's the end of the Paris Fashion Week as well, which is something else that is coming up. There's some really big shows coming up this week. I can't believe you haven't...
film, a
Megalopolis. Do you want to talk about this?
Big deal. Talk of Cannes, big budget, big stars. How will it go down at the box office, I suppose, is one of the big questions.
Take the cannoli. Anyway... That's the Godfather reference. The opening trade is done. Have a great weekend, folks. The Pulse is up next. Enjoy the weekend. This is Bloomberg.